Hi everyone, this is Devins Financial Weekly Stock Analysis Newsletter. Today is September 15th, 2013. Our newsletter is for your informational purpose only. We're not responsible for your gains and losses. Let's take a look at current market trend and our strategy. US stock market is back to the uptrend. Many more stocks are breaking out from a base. My plan, I have bought some more stocks last week. Let's take a look at market indexes and their charts. German DAX index is up to the uptrend. It stood up above, it went back above 50-day moving average and had a big up day last week, and it's now back to the uptrend. Shanghai Stock Index, China stock has also bottomed out, and here's a bottom process, and this big up leg that's lift up the index. Nasdaq rebound from 50-day moving average and keep going up. Now it's making a new high. This is in the uptrend. Mid cap index, US mid cap index is up to the it goes above 50-day moving average last week. That's very bullish. Small cap, Russell 2000 small cap also went above 50-day moving average. Right now it's in uptrend. SP 500 large cap index also rebound above 50-day moving average. All these are very bullish for the market. Gold monthly chart, gold rebound. Gold daily chart, and take a look at here. Gold has briefly broke 50-day moving average, and Friday, and it seems like it's rebounding, but we have to look at Monday, see if it can go above 50-day. If it can go above 50-day moving average, it will be very bullish for the gold. Silver daily chart. Silver has touched 50-day moving average and closed high on Friday. That's very bullish. GDX is a gold mining stock. Gold mining stock right now is sitting right at the support level, which is a trend line. You connect the supporting point and extend that line. The previous two supporting point and extend that line right here is sitting right on the trend line. If it can rebound to the upside, that would be a very bullish. US dollar is pulling back. Crude oil is in the uptrend. Right now it's consolidating, but it's holding 50-day moving average as it pull back. That's an uptrend. IYR is a real estate. US real estate is in the downtrend. Right now it's below 50-day moving average, but it may bottom up from here. We don't know. Let's take a look at. Let's wait and see in the near future, see if it can go above 50-day moving average and stay above. If it can stay above 50-day moving average, it has a hope. MBB is a real estate bond fund. This is reverse correlated to the real estate mortgage interest rate. MBB is going down, mortgage interest rate is going up. SMH is a semiconductor index, is in the uptrend. It went above 50-day moving average, and now it's trying to break the new high. USO is the crude oil ETF, uptrend. XLE is energy ETF, uptrend. XLF is a financial index. This is a very important index. Financial index is leading the market. Right now, XLF is sitting right at the 50-day moving average. We have to see what's gonna do next. If it can decisively break above 50-day moving average, that would be very bullish for the general market. Otherwise, if it break down, that would be very bearish. I'd like to share with you of two watch lists. The first list are the strongest stock in current market. Those are the best leading stocks. They're very strong in fundamental, and they have shown big institution accumulation signs. And they're the big leaders of the current market. But many of them are overextended right now. There's no buy point. We just have to wait for them to pull back and making a base. The second list are the leading stocks that near the buy point. Those are the stocks recently broke out or about to break out and still within 5% of the breakout pivotal point. Salesforce. This is a big stock. Salesforce gapped up with a huge volume after released earning, and this gap up breakout from a long-term flat base. This is very bullish for this stock. Usually, stock like that will go up in the future. Facebook. Facebook is a big stock, and those are the Facebook is a stock that the institution must own in this market. It broke the previous base and right here with a gap up, with a huge volume, with a big gap up after release earning, and after that it never looked back. It just keep on going higher. Right now Facebook has no buy point. LinkedIn also has no buy point. It's in the uptrend. You see the LinkedIn, they have several gap up. Right here, gap up with a huge volume. Didn't look back, keep on going. Right here, gap up again, keep on going. So those gap ups are very good indication that the big institution monies are buying these stocks. Tesla is in the uptrend. Right now, Tesla is making a base here, right here. It's about to form a 3-week tight pattern. That's basically for 3 weeks. It's been in a very tight range. If Tesla can break above 173.80, which is 10 cents above this high point, if it can break above that point, that would be a buy signal, which is something everybody need to watch closely because Tesla has been a very strong stock. It keep going on, up. It rarely offer any buy point, but right now it's making a 3-week tight pattern. So that's a potential buy point. Let's take a look at some of the stock near the buy point. ACT is near the buy point. This is a pivotal point right here. ARM Holdings is forming a base right now. It has shown the accumulation sign in the base, like this one and this one. Those two updates and has a big volume. That's an institution buy. This huge volume, that's an institution buy, and worth of watching it. Baidu recently broke out from here. This is a breakout from this little flat base, and previously has shown the accumulation sign in the base, and right now it's in the uptrend and just recently break out. It's still within 5% of breakout point, so it's within the buy range. Celgene is an uptrend. DPZ also break out here, and 64.60, that's a breakout point. FIVE5 and breakout here. Right now it's about the official breakout point is a 43.14, 10 cents above here. However, the breakout is a gap up. So when you have a breakout is a back gap up, you can buy right at the open day of the gap. That would be the buy point. Using that low of that day, which is 46, using that as a stop. If you try to fill the gap, you should get up. So this looks like a breakaway gap. FLT breakout right here. Recently breakout from a little flat base, 3-week tight pattern again. 108.48. That's a breakout point. Green Mountain Coffee breakout right here. This area right now is within the buy range. Lumber Liquidator breakout 103.42 and also within the buy range. Las Vegas Sand breakout 60.27. That's a breakout point. Looks like LVS is already beyond the buy range. NUS breakout right here. 89.79. Still within the buy range. Starbucks breakout pivotal point is 74.16 within the buy range. Ultra had a big gap up on Friday and after release earning. This is buyable. It looks like a breakaway gap. What to do in this market? Right now we're in the new uptrend. In this early stage of a new uptrend, investors should buy stock and buy aggressively. But only buy stock within the 5% of a breakout pivotal point. If the stock goes higher than 5% of pivotal, do not buy them. Wait for pullback. Either pull back to the latest breakout point or to 50-day moving average. after you bought the stock, use 7 to 8% below your purchase price and the stop for the cutting loss. If the stop came down 7 to 8% below your purchase price, you should get out. You should cut the loss. And then use 20% of the purchase price as a guideline to take a profit. However, hold on to the monster stocks. What are the monster stocks? Those are the stocks that has a new technology or product that changes human society, such as social media, social network, electrical cars. All those are new product can change the whole society. And also those companies should have ways to capture those earnings from their technology or product. So they need to have a strong earning growth, which means at least 20% annual earning growth and 20% recent quarter earning growth. And also those are the stocks institution must own. You can tell from the price and volume. If the stock has a huge gap up with a huge volume, those are the institution buy those stocks. So those like a Facebook right now, like a LinkedIn, like a Salesforce, like a Tesla, those are the institution must own stocks. And buy and break out from the first or second stage base. So when the stock break out from first or second stage base, if you buy them, you can just hold on to them for the long run, like a 6 months or a few years, and try to capture the huge profit from it. However, whatever stock you buy, if that stock has a high volume sell-off, you should get out, because that's a sign institutions are dumping them. When institutions are selling a stock, there's no way you should buy them. All right, that's all for this week. See you next week.